Tech Snippets Today with Joseph Raczynski.
All right, I am delighted to have Frederik Gregaard here, CEO of Cardano Foundation. Thanks for joining me today.
Well, thank you. It's an honor.
Oh, I'm looking forward to it, really. So this goes way back for me. So Cardano is the 10th largest cryptocurrency by market cap, sitting around $22.5 billion last time I checked. That's quite a number, because I do remember the ICO days, where I think you all raised around 62 million from the period of 2015 to 2017 at 0.002 cents. So in my head, Cardano has always been what I consider part of the old guard that helped manage and bring the ecosystem to where it is right now. Launched after Ethereum by Charles Hoskinson, which started off with the lovely smart contracts. Much has changed since then. In that period, there was lots of speculation. There were the ICOs, there was the NFT craze, DeFi Summer, and even the meme coin craze, if I do recall, not long ago. Now we're really focused on RWAs, so real world assets, and treasuries. So today I really want to focus in on the treasury aspect of things. Corporate treasuries have grown to $100 billion US, but most are still managing with spreadsheets and scattered wallets that lack transparency and control. The question today, are we and how do we make this next phase more transparent and clear for all parties participating? So that's what we're going to venture into. But before we even do that, I would love to hear a little bit more about you, Frederik. Like how did you get involved in this space? What's your background in, and what led you here?
Certainly. Yeah, so it's a really good question, right? Because I mean, I really got dragged into the space extremely early. I remember I walked down to my local bank because I had some university class about trading the contango and oil. And I was like, I don't really get this. And I had a little bit of money from my deployment in the military. And I thought, okay, I'm going to buy this oil future because then, I can touch it, I can feel it, right? And walked into the bank and they were just laughing at me and said, you're not qualified to do that. I was like, what do you mean? I mean, I have enough to hold my margin. Why am I not allowed to do this, right? And they called the manager and they were trying to explain to me that I was a subpar citizen because,
Oh,
as a
geez.
student, you should not trade futures, right? This is just not, it's not who does it, right? And I asked that, the question was, why is it that some people are allowed to have access and information and other people's don't? And what does make the, well, what kind of privilege do they actually hold? And is that fair? So I actually entered the space based on this idea that we must, it must be, from a fairness principle, a good idea to democratize access to capital markets. Now, doing that journey, it also turned out to me that there is a reason maybe why some people don't have access all the time, because sometimes if you work with very high leverage and so on, you might not understand what you actually, the risk you're taking, and there's an educational component. And that's also why, if you look through my career, this idea that high quality education is extremely important, actually more important for me than policy and regulation. Because I do think that we as humans, if we understand what we do, we have the capability to risk manage a lot ourselves. It's in our DNA.
Fantastic. My goodness, what a background. Okay, so for people that are less knowledgeable about this space, how would you describe the Cardano Foundation in terms of its mission and what you guys are working towards?
Yeah, so maybe first thinking about the Cardano public blockchain, because this is really this is really what we're talking about here, right? And the Cardano blockchain is the world's largest DAO, or digital autonomous organization. There's about, depending on how you count, there's about 7 million inhabitants who all have a digital ID. They go to the voting ballots, use their digital ID, and they basically take political decisions and treasury decisions, and they manage the treasury, which is close to $1.2 billion. There is no centralized entity who has privilege or rights. So this is all community managed through on-chain governance, smart contracts. And we even wrote a constitution together, and we ratified that online. I think this is completely unique. If you look back on who actually, when was the last time anybody wrote a constitution for a nation state, right? But we actually managed to do that as a community. The Cardano Foundation is a contributor to this DAO. We are 110 people. We are a Swiss non-for-profit, regulated or supervised organization. And our purpose is three things. The first thing is operational resilience. So as this de facto is a digital country, right? Ensuring that the infrastructure of this digital country keeps running, even in large market movements or electrical cutoffs or whatever that might be, is really important, right? That you get public services. The second part is to ensure that, because blockchain still is about power, it's about who has access and don't have access. And some people, think that some people shouldn't have access, right? It's really about ensuring that regulators and policymakers has the right education and understand the public good we provide, that we can keep operate for decades to come. And that means that we interact with regulators and policymakers around the world, and we do a lot in the education space. The third part, where we are starting to do a lot right now, is around adoption. So for many people, blockchain is equivalent to cryptocurrencies, right? It's a short-term economic opportunities, or maybe the ability to be able to send money from A to B without having restrictions or having walls in between. But what it also opens up for is, as I just briefly mentioned, is voting systems, new types of democracy. It opens up for tracking of cancer medicine in sub-Saharan Africa, so less people die because they're taking the right medicine with the wrong content, right? It's about, ensuring that we don't have all this greenwashing. It's about ensuring that the agent-to-agent, so agentic AI, can actually flourish, right, without being controlled by one entity, one giant spreadsheet, and everybody has to have all their private information in that, right? So this enablement of adoption and being able to prove to the world the value. So in short words, how is blockchain smarter, better, cheaper, right? We do a lot in that.
No, fantastic. And that's an amazing scope to think about in terms of all the different components there. And it's all near and dear to my heart. I mean, I've been talking about this for a long, long time. And the part that I've sort of grappled with it, I'd love to hear your thoughts before we move on to the treasuries aspect, is why do you think we haven't seen even more adoption over the years? I feel like there is so much potential here. I mean, the DAO structure is wild. I mean, it's fantastic. It can be a challenge at times when you have so many people sort of debating the same sort of things and voting on it. But bigger picture, how come we haven't seen more grander adoption of this sort of technology across the board?
Digital identity. We do not have good enough adoption of digital identities in plural. What that basically means is that if it lives on the blockchain, it dies on the blockchain, it has the limited scope of adoption. And this is everything you just mentioned in your intro, right? It lives on the blockchain, it dies on the blockchain, and that's it. But in order for us to really get blockchain out where it really matters, we need to ensure that the blockchain, which is a digital database, decentralized database, that is interoperable with the real world assets, the institutions, the people out there. And most people think about identity as your passport or something like that. But we actually have 2 billion people in this world who don't even have a national identity or a passport. And they're basically cut away from the banking system, but also from the health system, and in many cases also from the tax system and so forth, right? So I think what we've really been lacking is we've been lacking a good bridge between identities in plural and identities working on blockchain. And this is one of the key things we actually do at the Cardano Foundation. We created an identity wallet where you don't need blockchain, where you can manage identities from satellites to trees we planted in Kenya, all the way up to what's called the legal entity identifier, which came out of the last financial crisis when Lehman collapsed, where we discovered that it took basically PwC 12 years, right, to unwind that, because the contract just said Lehman. But Lehman had hundreds of different daughter companies, so you actually didn't know which balance sheet you were up against, right? And a lot of people lost their job, not because they didn't have a claim to their assets, but because you just didn't know where you were in the book, in the chapter 11, right? So in my view, being able to manage what I think about as offline or Web2 identities, right? with identities who's interoperable with this decentralized database is where you're going to see the next move of real world adoption. And we're seeing that right now as we are working together with something called the GLIDE, which is the Global Legal Entity Identifier Foundation, where we are implementing the Cardano wallet there. And this is basically the organization who issues and is the watchdog for the LEIs, which is moving 80% of all world trade. 80, all world trade.
That's amazing.
And on the other side, we have over 100 companies now in Germany using DIDs. This is digital identifiers, is a lower version of machine identities for agentic payments, right? And having the ability not just to have different really good identities, but also being able to manage that in an enterprise quantum secure fashion is what's going to really matter for adoption.
Eloquently said. My goodness. No, I absolutely agree with you. I mean, what I'm seeing currently are just some countries have decided to go down this path. I think some of the traditional companies, maybe like Switzerland or the United States, whatever, it's going to take a little bit longer for those particular jurisdictions to maybe go down there. But you're seeing like the UAE jump into this. You're seeing other countries who are just saying almost, here's leapfrog technology. Let's actually dive into this wholeheartedly. So that's great. I mean, that's fantastic to see. Okay. So the question of the day is really around these crypto treasuries. I've been in the space for a long time, and the treasuries to this day still make some sense to me, but not a ton of sense. So I think I'd love to hear your view or perspective on treasuries in the first place, and then we'll go down what's happening with them right now.
Yeah, my view is very binary, right? So I think that it makes a lot of sense to think about your balance sheet currency. And if you think about your balance sheet currency, using Bitcoin or ADA as your balance sheet currency could actually make a lot of sense when you look at, how much is being printed of money and, inflation and those kind of things. However, the world is not run yet in Bitcoin or ADA, right? So it opens you up to another exposure. But when you look at, for instance, what Saylor does in MicroStrategy, he's really, riding a perfect wave of basically depth, which is unwinding. The T-bills are unwinding, right? And using Bitcoin as the currency on his balance sheet, right? And I think that is truly innovative, building on, trends we've seen in TradFi for a long time. But when you speak about this wave of debts, that's not what you're speaking about. You're speaking about, all the rest which is coming, which is basically, this idea that you buy a Nasdaq shell which has some residual risk, right? And then you invest in the underlying assets, and then you're looking at this MNAV and you're trying to figure out, am I buying at a discount or am I buying at a premium? And I think this doesn't really make sense to me, right? It only makes sense if there's a regulatory arbitrage. And this regulatory arbitrage can be like in a tax content, right? So in Japan, for instance, there is a situation right now where cryptocurrencies are taxed extremely high. But if you own it as an equity, I think there's a 20% difference, right? And 20% difference is huge, right?
Huge.
So there you can think about that the MNAV could be trading at a premium of 20%, right? Because that's the tax difference. But in a country where the taxes is the same for cryptocurrencies and for equities, right? You kind of always pay more than you want. And then the question is, why is it if you are an institutional investor or if you are a family office that you are not allowed to hold the underlying? And there is a good reason for that sometimes, right? It's a part of your investment policies, a part of the regulatory context you operate, is consumer protection. We can argue whether that's good or bad, right? But the way I look at it is there's nothing right now who beats Bitcoin or ADA in cold storage in terms of security. Everything after that, comes as a disadvantage, right? And the more you wrap it and the more you add complexity around it, the more problems it will create downstream for you.
So I definitely want to get to the downstream aspect of this, but before that, I'm still trying to wrap my head around the implications of, let's just use Michael Saylor's strategy, right? So that company basically is buying an inordinate amount of Bitcoin with the thought process that it's going to continue to go up. My question is, over time, we've seen, and hopefully over time, these things become less volatile, but in the current era, they are still very volatile. So if it were to cut in half from whatever 107,000 today to 50,000-ish US dollars tomorrow, what implications does that have for Bitcoin or that cryptocurrency? I was using this as a proxy. As that, are they going to be forced to sell? Like, you know what I mean, for solvency, and then that continues to perpetuate that downward movement. What do you think about that, out of curiosity?
So I think most people don't understand a security analysis, and they just basically, see an opportunity here, right? What Saylor has done really is not unique in any way because we did that already in the 80s and 90s. It's just we didn't do it with Bitcoin, right? But what he did is he separated his asset, basically how he gets access to the capital, right? With the stocks, right? So what he basically does is the stock price is basically, is not depending on the Bitcoin price at all. Huh? So he goes out and he borrows in the market, right? And he has access, and this requires you have very good access. And this is one of the issues we see with other debts. They don't have this access to depth and capital markets as Michael Saylor has, right? So he goes out and he basically says, you have two options. You can buy T-bills or you can buy my depth, right? And I'm willing to give you more interest on my depth, right? Because he's saying that over time inflation, because he runs the balance sheet in Bitcoin, he says over time inflation is going to eat up the payback or the interest rate payments, right? So he's actually not even betting on Bitcoin going up. He's just betting on that the fiat inflation is higher than the Bitcoin inflation because you cannot print more Bitcoin. And then because he separated that in the two financial instruments, right? He created this, I wouldn't call it an amazing trade, right? But he created something who actually makes sense. When you look at some other digital asset treasuries, right, where they buy a business which, has residual risk, Michael Saylor also have residual risk from his current business model, which is not about the Bitcoins, which is about the services he provides, right? But there the idea is you buy something where you have no influence over the P&L, right? You have to take over what's basically there because it's required by NASDAQ that you cannot just change the business model. And then you load it up basically with either one digital asset or multiple digital assets, right? On the idea that that will increase in value, but you don't have the same access to depth and you don't have the same structure in place, right? And I think that creates a tracking error, which we already saw last Friday where we had the big market corrections, right? We saw that this tracking error is going to hurt you tremendously. And we already see now companies who were able to raise a lot of money for digital asset treasuries are trading at a negative or at MNAV below 1, right? And then you have to ask yourself the question, right? Why would I buy that? But the other question, of course, would be if you'd be sitting and you'd be BlackRock and you could buy a Bitcoin treasury at an MNAV below 1, I mean, you would probably buy the company, right? You would not buy a equity because you think this would go, but you just buy it because you want the underlying asset. If the residual risk is not too big and you wind that down and you add that into your ETF, which by the way is the most successful ETF we ever seen, right? BlackRock's
Right.
Bitcoin ETF is the most successful ETF, and the tracking error is very small, right? Now it's not very leveraged, right? But
Yeah.
the tracking error is very small. It's an equity, it's a retail available, right? So I think that that type of product probably for many investors supersedes what you will find on the debts.
Okay. A quick tangent, if I may, just for a second. Have you seen this latest trend that has happened probably over the last, I'd say 6 weeks, where they're doing NFT strategies or NFT treasuries, where
Yeah.
they basically have it's almost like a DAO structure. They're saying, okay, buy the floor of that NFT. And these are Grail NFTs, so these are important NFTs. They're not whatever that's out there. And one example would be like the CryptoPunks on a different ecosystem. Sorry, but they
That's
basically
okay.
buy the cheapest CryptoPunk and immediately they list it at about 10% more. And then anybody who buys into this, they continue to gather funds. It's like a flywheel that continues to perpetuate the purchase and the sale of these NFTs.
Yeah.
Just thought it's kind of fascinating to think that
Oh
they're moving in
yeah.
that space too.
Yeah, no,
Yeah.
no. But let's be quite clear, right? I mean, there was a great movie coming out called The Wolf of Wall Street, right? which is exactly speaking about this. Back in the days, we called it penny shares, right? If you
Yes.
have something who is like have very, very small value and nearly no liquidity, and you have a way to distribute that, in that movie, it was a movie based on a real life scenario, right?
Yeah.
It was basically if you had a call center who could create some buzz in a low liquidity, low valuated stock, right? You can create a high percentage increase, right? And then if you go out as one of the early ones, right, you have a short term economic gain. And I think what I'm reminded of is because I actually used to sit on a trading floor who was quite similar to one of those. I was not pushing penny stocks, but I was pushing, Lehman products. And when Lehman went down, I got really an epiphany check, right? Because I was like, well, hold on a second. I sold capital guaranteed products from a tier one, bank, investment bank, and they told me this was capital guaranteed. And
Wow.
yes, maybe some people got the money back after 12 years, but a lot of people didn't. It was definitely not the structure which we were selling. And what that sort of also made me realize, for instance, is sometimes it's not about counterparty risk. It's about the ability to get access. It's not about right or wrong anymore. It's about if something goes wrong, can you access your capital, right? And what we've done here in the Cardano Foundation, which is, I just had a discussion with a tier one investment bank here in the office, same office, just basically half an hour ago. And he said, why would you do this, right? Because what I explained to him is Cardano Foundation has for the last 2 years posted all financial transactions we are doing. So over 50,000 financial transactions, from salary to rent to buying and selling Bitcoin to all our activities we've done. And we posted the balance sheet and the earnings statement as well, which basically gives you the ability to check, right, if we compiled the balance sheet and the earnings statement correctly, right? It allows you to run machine learning models on this, right? And he was like, why would you be so transparent? And I'll be like, I'm a Swiss non-for-profit.
Yes.
I
Yeah.
live in the blockchain space. Why will I not be that transparent? Because I believe that by being so transparent, we will change the incentive models of current capital markets. We will start moving people who did not care because they could not influence it to suddenly care. Imagine a world where you own one Credit Suisse stock and you had this kind of insight and you went to the General Assembly, even though the big pension funds had all orchestrated what was supposed to happen at the General Assembly. And you based on the machine learning data I took out of the blockchain, I can see you are well capitalized, but you have one exposure here. What is that?
Yeah.
Right? This will change the accountability we have in capital markets. So I think what I'm trying to say here is that we're sitting with a unique set of opportunity with internet, blockchain, and AI, who right now will allow us, without 10 years accounting experience, to claim accountability back to the investors and create everybody the opportunity to be a stakeholder, not just a shareholder, and change some of these incentive structures. And if this is then okay, then people doing these NFT treasuries and bundling things, I'm fine. It's called gambling, and they have now the means, right? But I think we really have to differentiate right now between what is a long-term investment strategy and how do you actually verify that people are doing what they're supposed to do, and what is I mean, we all from time to time gamble on something, right? Whether that's your son's soccer match or whether that's the weather, or I mean, we have a great tool on Cardano called Bodega, which is basically a platform where you can upload any bet you want, right? And it's a prediction market. And I think it's amazing to see these prediction markets, which, by the way,
Yes.
came from CIA, right?
Yeah.
CIA invented prediction markets, which is another great story we can get into.
No, it's amazing, all that information. So just to finish off on the on-chain treasuries rules, basically you
Yeah.
want to incentivize people, organizations, so that it sort of scales out that way. That's the best way of doing that, you think?
So on-chain treasuries, right? I think there's two components to it, right? One is the transparency, and the other one is the corporate governance, and even more corporate governance is called binary governance, right? I think if you take an old structure, like a limited liability company who's managed on Excel spreadsheets, and you add digital assets to it and no transparency, I don't think this is a success story for the investors on the long run. But if you do something like we do on Cardano, that you have smart contracts, you have on-chain voting, and you have transparency, and you guard your treasury through these means using the blockchain, I think you have a winner for the future.
Amazing. Okay. Now, any last thoughts that you wanted to share that we have not covered about Cardano?
Yeah, we have a unique opportunity actually coming up here in a couple of weeks in mid-November. It's in Berlin. So we'll be meeting up with the larger Cardano community in Berlin, and that's going to be really top tier companies from Volvo, the car manufacturer, to Boston Consulting Group, to MasterCard, etc. And there we're going to have a fantastic mix of a couple of hundred deep tech people who is in the intersection of AI and blockchain, meeting up with these classical enterprises who's been dabbling in different types of blockchains for the last many years, and they are now finally deploying on systems like Cardano. And I think this is a great place to come and basically tap into not just the Cardano space, but tap into the space where real deployments are happening between the classical enterprises and the offline world and the blockchain.
Fantastic. Frederik, thank you so much for your time today. That was so enlightening. I really do appreciate it.
Well, thank you for having me, and it's a pleasure to follow your show.
Tech Snippets Today with Joseph Raczynski.